I would like to welcome you to another interesting session related to the CIA review course. We are going to be discussing the attribute standards of the IPPF that they will ask you about in the exam. So first, let's start understanding the new updates that IIA they had to the standards in 2017. You can see the old standards, the old framework. The old framework, they had mandatory guidance and they had another section called strongly recommended. In the new model, they have mandatory guidance, but they have only something called recommended guidance. Also, in the old model, we have only the definition. So what is the definition of internal audit? The definition of internal audit will explain to all the stakeholders what internal auditors are doing inside the organization. But IIA, they said, we need to add something called the mission. So what is the mission? The mission will explain to internal auditors what is their purpose inside the organization. That their purpose actually is to enhance and to protect the value of the organization by doing three things. By providing assurance, so in that way they provide assurance to the board of directors that everything is working according to the plans. And by providing insight, so in that way management, they will be able to do things correctly today. And by providing advice, so in that way management, they will be able to do everything according to the plan tomorrow. So this is what IIA added. They added the mission. Also IIA, they added something very important, which is the core principles. So someone will say, if we have the standards, why are we adding something called core principles? Because the principles will define how internal auditors need to do auditing. The standard will tell them exactly what are the standards they need to follow. But we need to understand based on what principles they need to implement internal auditing. The principle will say internal auditors, they need to be objective. They need to do audit with integrity. They need to have the right skills. They need to think in a strategic way when they are trying to help the organization achieve their objectives. And we can see that IIA, they replaced what we had as a practice guide and practice advisory and position papers with something called implementation guidance and supplementary guidance. So these are the main changes related to the IPPF standards. So now let's start step by step going over the standards and understand what are the new things that they added and they changed. Number one, we are speaking about the attribute standards. So we understand that IIA, they have two kinds of standards in the IPPF. They have the attribute standards, which is explaining exactly what are the attributes that they are expecting internal auditors to have. Like internal auditor, they need to be independent, they need to be objective, they need to do due diligence work, they need to do with the professional care. All these issues, all these attributes that internal auditors, they need to have while they are performing their internal audit work. These we call them the attribute standards, and they are coded as 1000 in the standards. We have the other section. The other section is related to what we call performance standards. And performance standards is all about understanding how internal auditors, they need to plan the audit, perform the audit, conduct the testing, and report the result, and do the follow-up. So these are coded in the standards as 2000, and they explain exactly how internal auditors, they need to conduct internal audit. First, with the attribute standards, we start with 1000. 1000 is related to the purpose, authority, and responsibility. So look what the standard will say. The standard will say the purpose, authority, and responsibility of the internal audit activity must formally, what's the meaning of formally? Documented, must be written where? Question in the exam, it should be defined in the internal audit charter. Great. So the first thing, we need to ensure all the responsibility, authority. What's the meaning of responsibility, authority, and purpose? The meaning of it, what documents you can access inside the organization, what kind of activity you can do, what kind of assurance activity, what kind of consulting activity, what is the scope. Can you conduct audit over ERM, enterprise risk management? Can you actually do reporting on governance? These are the issues need to be defined in the charter. Now, how they need to be defined in the charter? Look what they say. They say it should be consistent with the mission of internal audit and the mandatory elements of the IPPF standards, which is the core principles and code of ethics, the standards and definition of internal audit. So they say these are the things that need to be considered when you are writing and creating your internal audit charter. They say the chief audit executive must periodically review the internal audit charter and presented to the senior management and the board for approval. So the chief audit executive is responsible for doing a review to the charter at least annually and present it to what? To the board of directors for approval. So let's discuss. Who will prepare the internal audit charter? The chief audit executive will prepare the internal audit charter. Question. Another question. Who will review the internal audit charter? Will the audit committee will review the internal audit charter? Another question. Who will approve the internal audit charter? Will board of directors, they will approve the internal audit charter or senior management. Now, look what they say. Internal audit charter is a formal document that defines the internal audit activities, purpose, authority, and responsibility. The internal audit charter establishes the internal audit activity position within the organization, including, look what, including what? The nature, chief audit executive functional reporting relationship with the board. So in the charter, we explain exactly that internal auditors, they need to be independent by reporting directly to the board related to anything related to internal audit work. They will define in the charter the authorized access to the records, personnel, and physical properties relevant to the performance of the engagement. What kind of records, what kind of individual you can speak with inside the organization for you to conduct your internal audit work. Also, they define the scope of the internal audit activity. What entities inside the organization you can or you can't audit? What is the scope of your audit universe inside the organization? That will be defined in the internal audit charter. They say the final approval of the internal audit charter resides with the board. So of course, the board, he is responsible for approving the internal audit charter. Now, they say number 1000A1, the nature of assurance services provided to the organization must be defined in the internal audit charter. What kind of assurance? Can you provide assurance over IT? Can you provide assurance over different divisions inside the organizations, over ERM processes, over any internal control, over any division, over international branches? This needs to be defined in the charter. They say if assurance are to be provided to parties outside the organization, the nature of the assurance must be defined in the charter. If you are providing any assurance to someone outside the organization, also this need to be defined in the charter. Now, number 1000C1, they say this is C. Why C is related to consulting? They say the nature of consulting services must be defined in the internal charters. So also the consulting services that you perform as an auditor need to be defined in the charter. Now, look what they say. They say this is 1100. They say recognizing mandatory guidance in the internal audit charter. The mandatory nature of the core principles for professional practice of internal auditing, the code of ethics and the standards and the definition of internal audit must be recognized in the internal audit charter. So all this need to be inside the internal audit charter. So internal audit charter should follow the IPPF standards. So now IIA in 2017, they updated their internal audit, their IPPF standards. So your internal audit charter inside your organization need to be updated to reflect the changes in the standards. They say the chief audit executive should discuss the mission of internal audit and mandatory elements of the international professional practice framework with the senior management and the board. This is an important point. It's not enough for you to go and update the internal audit charter and say, I have the internal audit charter updated, I send it to the board will sign it and finished. You need to discuss it with the board. Why? To make sure the board is aware of the changes, of the new things that happen in the charter. At least they have an idea what they are signing on off. It's not like they are just signing the document and saying, here, just do it. They need to understand it. So it's very important for you to arrange a meeting with the board of directors and discuss the changes that happen in the IPPF. Now, this is the first section. Let's start with the second section. The second section is related to understanding what are the attributes that we are expecting from you as an internal auditor. As an internal auditor, the definition of internal auditing is very important. Do you remember the definition? Internal auditing is an independent. The first thing they start with, internal auditing is an independent. What's the meaning of an independent? The meaning of an independent, you need to have direct relationship with the board. Every time they ask you, In a question, are you independent? You need to see, do you have direct relationship with the board? Can you go and report directly to the board related to everything related to internal audit work? Also, internal auditor, they need to be objective. So they say internal auditing is an independent and objective. What's the meaning of objective? Every time they are speaking about are you objective or not as an internal auditor, it's all about conflict of interest. Do you have conflict of interest while you are performing your work or not? That's the meaning of objective. So they say internal audit activity must be independent. We are speaking about the activity. And internal auditor must be objective in performing their works. So we are speaking about the activity is independent and the internal auditors are objective. So now let's see the interpretation. What they are saying in the interpretation. They are saying independence is the freedom from conditions that threaten the ability of the internal audit activity to carry out internal audit responsibility in unbiased manner, to achieve the degree of independence necessary to effectively carry out the responsibility of the internal audit activity. So do you have the ability to carry out your work and report directly to the board or not? Are the senior managers inside the organization stopping you from doing that? The CEO, the CFO, they are saying you need to run everything by us before speaking with the board of directors. If this is happening, you don't have direct reporting to the board of directors. They say the chief audit executive has direct and unrestricted access to senior management and the board. This can be achieved through dual reporting relationship. What's the meaning of that? You have two kinds of reporting relationship. You have functional reporting related to everything related to internal audit work, and you have what we call administrative reporting related to areas not related to internal audit work. So these are the two kinds of reporting that you have. They say threats to independence must be managed at an individual auditor level, engagement, functional, and organizational levels. So any issues related to independent, you need to manage it and address it immediately. Second, what is objectivity? We discussed objectivity is all about what? It was all about conflict of interest. So they say objectivity is an unbiased mental attitude. It's how you think as an internal auditor when you are performing your job. If you are auditing your friend, you are not going to be objective. If you are auditing your cousin, you are not going to be objective. If you are auditing someone that you have relationship with, you are not going to be objective. So objectivity is all about your ability to perform your job without any conflict of interest. So they say it's about objectivity is unbiased mental attitude that allows internal auditors to perform engagements in such a manner that they believe in their work product and no quality compromises are made. So you are not trying to adjust anything because of the other person that you are auditing, because of the situation that you are in. They say objectivity requires internal auditors do not subordinate their judgment on an audit matters to others. Threats to objectivity must be managed at an individual auditor engagement, functional and organizational level. If you speak with managers and you ask them, tell me, are internal controls working? And they say, yeah, they are working. Don't worry, you don't need to test them. You will not rely on their judgment. As an auditor, you need to be objective. You need to do the testing to rely on your judgment, not on their judgment. That's the meaning of objectivity. Now, let's go and understand them in more details. They say the standards 1110, organizational independence. They say that chief audit executive must report to a level within the organization that allows the internal audit activity to fulfill its responsibility. So they are saying you need to look inside your organization. Are you going to report to who? To the head of the organization, to the senior management, to the board, to someone that will allow you to be able to carry out your responsibilities inside the organization. It depends on your organization structure. They say the chief audit executive must confirm to the board, at least annually, the organizational independence of the internal audit activity. At least annually, you need to come, knock on the board of directors' door and say, hi, we are independent. How can you do this in reality? You can send them that by the annual report that you send to them, and you say, we conducted our audit during 2017, 2018, and we are independent. So it's very important to communicate at least annually to the board of directors that you are independent while you are performing your work. They say organizational independence is effectively achieved when the chief audit executive reports functionally to the board. So they say what kind of functional reporting you need to do to the board. These are the things. Approving the internal audit charter need to be done by the board. Approving the risk-based internal audit plan. Approving the internal audit budgets and resource plans. Receiving communications from the chief audit executive on the internal audit activity. Performance relative to its plan and other matters. Approving decisions regarding the appointment, the remover of the chief audit executive. Who will hire and fire the chief audit executive board of directors? Question. Approving the compensation, how much the chief audit executive is going to earn, what is the annual bonus. This is not done by management, not by HR department, done by who? By the board. Managing appropriate inquiries on the management and the chief audit executive to determine whether inappropriate scope or resource limitation are there. So all these, we consider them what? We consider them functional reporting. Then 1110 A1, they say internal audit activity must be free from interference in determining the scope. Management should not influence your decision. They should not say, oh, don't audit this. This is not important. Leave it for next year. Why are you auditing us? You, as an internal audit, you have the right to determine your scope. What areas you are going to audit, what areas you are going to leave out. And communicating results. You have the right to communicate the results directly to the board of directors. They say the chief audit executive must disclose such interference to the board of directors and discuss the implications. If management, they are trying to influence you, maybe you need to speak with board of directors and say, look, they are not allowing me to do my job. How can we do it much better next time? Can you speak with them and make them understand that my role inside the organization is to provide assurance to you, not to them? Now, something very important you need to consider is what? It's 1111, direct interaction with the board. They say the chief audit executive must communicate and interact directly with the board of directors. You need to have direct access to the board of directors to be able to achieve your independence. They say the chief audit executive role beyond internal auditing. What you need to do more than doing internal auditing. Someone will say, the chief audit executive now, they need to perform more than conducting only internal audit. Yes. Why? Because the expectation of the stakeholders that internal auditors, they are not only going to provide what we call assurance, but they are going to help the organization achieve the goals by understanding the strategic risk the organization is facing, understand how they can help the organization explore and change their internal controls to adapt to the environment, to be able to survive in the future. Internal auditors are playing a very important role in making sure the organization will succeed and will stay in the market. So look what they said. They said where chief audit executive has or is expected to have a roles and or responsibility that fall outside the internal auditing, safeguard must be placed to limit the impairments to the independence and objectivity. If management, board of directors, any of the stakeholders, they say, internal auditors, we need your help. We would like you to do something other than conducting normal internal audit. We would like you to help us in implementing risk management. You say, me? Auditors implementing risk management? That looks like I am actually not auditing, I am doing work on behalf of management. So in that way, you need to have safeguards. You need to say to board of directors, do you really want me to go and do implementation related to risk management? Now I will get my hands dirty in the implementation. If board of directors, if audit committee, they said, yes, we want you to go and get your hands dirty in them, you need to communicate to them and make them understand. If I will implement, if I will design, if I will be part of the implementation and installation, now I can't audit it anymore, and you need to bring someone from outside the organization to provide the assurance. If they are okay with that, at that time you discuss the issue of considering doing this implementation. If they say, no, we want you to implement today and audit tomorrow, you can say, no, I can't implement today and audit tomorrow. If I implement anything inside the organization, I need to wait for at least 1 year, and after that I can come and audit it. I can't audit it tomorrow. So they say Chief Audit Executive may be asked to take additional roles and responsibilities outside of the internal auditing. Such responsibility as what? Responsibility for compliance. Responsibility for risk management activities. These roles and responsibility may impair or appear to impair the organizational independence of the internal audit activity or the individual objectivity of the internal auditor. So if they say help us in implementing risk management, you say what kind of help do you need? You want me to do training? Training is okay. You want me to review what you are doing? Review is okay. You want me to see exactly what are the best practices? That's fine. But you want me to do the implementation? Now we need to discuss. So look what they say. They say safeguard are those oversight activity often undertaken by board of director to address these potential impairments and may include such activity as periodically evaluate reporting line and responsibility and developing alternative processes to obtain assurance related to the areas of additional responsibility. If you have additional responsibility, we need to understand to who you are reporting. What kind of activity? What are you doing to understand? Are you now still performing your independent and objective role inside the organization? Or you are moving to be helping management in doing the actual implementation, so actually you are reporting to management, not board anymore, and you can't actually doing audit over that function. Alright, now we move to internal audit objectivity. So what is objectivity? They say internal auditors must have impartial, unbiased attitude and avoid any conflict of interest. So objectivity is all about conflict of interest. We need to ensure that you don't have conflict of interest. In fact, so you are not auditing your cousin, you are not auditing someone that you know, and in appearance. So also, if you have any kind of relationship that will appear that you have with the person, so in that way you have a relationship with him outside the organization, or they see your photo with him on Facebook, or the same last name for you is the same last name for the person. In appearance, it will appear that you have conflict of interest. So they say conflict of interest in fact and in appearance. And you don't need to have any relationship with him, so he's not your relative, he's not your friend, and any activity. You are not doing any business with him outside the scope of you as an auditor auditing his department. So look what they say. Conflict of interest is a situation in which internal auditor who is in the position of trust has competing professional or personal interest. Such competing interests can make it difficult for the internal auditor to fulfill his or her responsibility impartially. They say a conflict of interest exists even if there is no unethical or improper act result. So what they are saying, even if you believe you are going to be objective, you are going to do your job in the right way, if there is conflict of interest, so in that way there is conflict of interest, regardless of if you say I'm going to be objective or not. Conflict of interest exists, so you are not going to be able to be objective. They say a conflict of interest can create an appearance of improbability that can undermine the confidence in the internal auditor, the internal audit activity, and the profession. Conflict of interest could impair the individual's ability to perform his or her duties and responsibility objectively. So let's go and understand what can happen if you are gonna do any work and after that, while you are performing the work, you will discover you are not objective or you are not independent. Now let's discuss something here very important. If you do recommendation for standards or controls related to any processes inside the organization, is this okay? This is okay, you are still objective. If you do any performance of a review of a procedure they are about to implement, are you objective? Yes, you are objective. But if you are actually drafting the procedures, if you are designing the procedures, if you are implementing the procedures, now you are not objective anymore. Why? Because you are doing part of the implementation. So in that, how can you be objective? Of course you are going to say your work is great. So look what they say. They say if independence or objectivity is impaired, in fact, as we discussed, or in appearance, the details of the impairment must be disclosed to appropriate parties. You need to disclose that we are actually not able to perform our job in the right way. They say the nature of this disclosure is depending on the impairment. Depends on what's happening. You are doing an audit, and after that you discover that maybe this organization that you are offering or this department, they ask you to work with them. And in that way you are considering moving from internal audit to be working in that division. If this happened, definitely you are not going to be objective. Why? You are now auditing your future boss in the future. So you are be like, I need to be nice with him so he will hire me in the future and I work within his department. If you feel any of that happen, you are not going to be objective. So look what they say. Impairment to organizational independence and individual objectivity may include but not limited to personal conflict of interest, if you have any conflict of interest in the audit you are doing, or scope limitation, you can't collect all the information to provide an accurate opinion, or restriction on access to record, you can't access the record that you need to provide an objective opinion, or personnel or properties or resource limitations such as funding. They say the determination of the appropriate parties to which the details of impairment to independence or objectivity must be disclosed is dependent upon the expectation of the internal audit activities and the chief audit responsibility to senior management and the board, as described in the internal audit charter, as well as the nature of impairment. To who you are going to report this, what kind of impairment, what is the issue, is always will determine in the charter. In the charter you can say, if this kind of impairment happen, we need to report to audit committee, board of director, and chief audit executive need to be involved in the process. They say, standards 1130 A1, internal auditors must refrain from assessing specific operation for which they have previously responsible for. So if you are responsible for doing accounting, auditing, accounting, risk management, you can't do audit on them unless at least 1 year has passed. So what they say, objectivity is presumed to be impaired if internal auditor provides assurance services for activity in which the internal auditor had responsibility within the previous year. So after 1 year, you can actually audit the work, but before that it's not allowed. This is only for auditing. If we speak about consulting, can you do it or not? Of course, consulting you can, but auditing you can't. They say assurance engagements for functions over which the chief audit executive has responsibility must overseen by party outside the organization, outside the internal audit activity. So this is interesting. If you as an auditor or performing any job, if the chief audit executive is doing or responsible of any function inside the organization other than internal auditing, he can't, and the department of internal auditor can't actually do the audit on it. They need to bring someone outside the internal audit activity to perform the audit on it. That's the question. Now, they say internal audit activity may provide assurance services where it has previously performed consulting services, provided the nature of consulting didn't impair the objectivity, and provided individual objectivity is managed within when assigning resources to the engagement. So if you are performing consulting, what's the meaning of consulting? You are actually trying to show them which is the most appropriate model for them to implement. You are consolidated report for them. You are giving them training. If you are doing consulting for them, and they ask you then again to be able to go and do an audit, can you go and do an audit on them? If board of directors ask you, can you audit them? You can say yes, because you are only providing consulting services. You are not going beyond consulting and auditing. So that's okay. They say, for consulting, internal auditors may provide consulting services relating to operations for which they have previous responsibility. If you have performed any job related to ERM, related to accounting, related to operation, and then they ask you, can you come and help us in providing consulting services? After 1 month, after 6 months, yes, you can. You have no issues. However, if they ask you to audit them, you need to wait for 1 year. They say if internal auditors have potential impairment to independence and objectivity relating to proposed consulting services, disclosure must be made to engagement client prior to accepting the engagement. If they ask you, come and help us in doing some consulting work, and you feel as an internal auditor that this consulting work may impair your ability in the future to do objective and independent audit, you need to disclose that to ensure that everyone is aware of the consequences of this engagement. So that will cover the issues that we discussed related to independence and objectivity. Now we move to proficiency and due professional care. Look what they say. Engagement must be performed with proficiency and due professional care. What's the meaning of that? For you as an internal auditor, you need to be proficient. You need to have all the knowledge related to internal audit activity, procedures, how to follow the IPPF standards. You need to understand how to do the appropriate testing, how to come up with the right conclusion, how to write the audit reports. These are the area where we are expecting that you have the high level of understanding, and as well as you are professional in doing your job. So we have different areas where we need to understand your knowledge. So let's discuss. If you are discussing, let's go over the list of them. We are speaking about internal auditing. Internal auditing, they need to be professional in internal audit work and in accounting if they are doing any kind of financial testing. They need to have knowledge related to fraud, to be able to assess fraud risk inside the organization, and they need to have knowledge related to what? They need related to information security, information technology, to be able to assess the IT risk. So again, internal auditors, internal audit work and accounting, if they're doing financial accounting, they need to be professional in that, and knowledge is related to fraud and IT. They need to have understanding of the management principles, and they need to have appreciation. They need to be able to at least have a basic knowledge related to different areas of accounting, economics, law, taxation, all the other areas, management, administration. So in that way, they will be able at least to assess the situation when they are doing their internal audit work. So look what they say. They say proficiency. Internal auditors must possess the knowledge, skills, and other competencies needed to perform their individual responsibilities. They say their individual responsibility. The meaning, not all the auditors in the whole department, they need to have all the skills. Each individual, if you are doing IT audit, you need to know IT audit. If you are doing actual cybersecurity audit, you are doing fraud assessment, whatever function you are doing inside the internal audit department, you need to have the knowledge, skills, and experience related to this responsibility. They say internal audit activity collectively. Now they are saying all the individuals inside the internal audit department together, they need to have the appropriate knowledge together to be able to do the job that's required from the internal audit department. So they say internal audit activity collectively must possess or obtain knowledge, skills, and other competencies needed to perform its responsibility. Let's read the interpretation. They say proficiency is a collective term that refers to the knowledge, skills, and other competencies required of internal auditors to effectively carry out their professional responsibility. They say it encompasses consideration of current activity, trends, and emerging issues to enable relevant advice and recommendation. So it's based on your understanding, you can advise management about the emerging issues, about the risk, about what's going on. You are actually helping the organization not only provide assurance that everything in the past done in the right way, but you are doing business assurance that the future is going to be done according to the plans. They say internal auditors are encouraged to demonstrate their proficiency by obtaining appropriate professional certifications and qualifications. The more you obtain certifications like CIA, CRMA, CCSA, the more you are demonstrating that you understand these issues and you are actually advancing your skills, so in that way you are qualified to help management in performing the audit over the functions that you are auditing, in helping them in achieving the goals and auditing risk management and implementing control self-assessment inside the organization. They say such as CIA certified internal auditor designation and other designation offered by the IIA. Then let's continue. They say 1210A1 Chief Audit Executive must obtain competent advice and assistance if internal auditors lack the knowledge, skills, and other competencies needed to perform all or part of the engagements. So let's now discuss. If the board of directors called the chief audit executive and he said, we would like you to go and do an IT audit. And the chief audit executive, they have no one inside the internal audit department who can do that. Can the chief audit executive tell the board of directors, sorry, we can't? We don't have anyone who can do it? No. The chief audit executive is responsible for doing the audit that is requested by the board of directors. So he got an option of hiring someone inside the internal audit department to do it, or finding someone outside so he can outsource that and hire someone who can do this engagement only, and after that, he will work on a temporary basis just for the engagement. So for that internal audit function, they need to bring someone to work on this engagement in case they don't have the skills, experience, and knowledge to perform this engagement. They say internal auditors must have sufficient knowledge to evaluate the risk of fraud and the manner in which it's managed by the organization. But they are not expected to have the expertise of a person whose primary responsibility is detecting and investigating fraud. So they are saying, related to internal audit work, as an internal auditor, you need to have the professional skills to do it. Yes, but related to fraud assessment, related to fraud risk, we are not expecting you to be professional. We're not expecting you to be an expert. At least you need to have the basic knowledge to identify red flags, to test the internal controls, to ensure they are working effectively to be able to catch fraud. They say internal auditors must have sufficient knowledge of key information technology. So it's not only fraud, it's also information technology. Risk and controls are available technology-based audit techniques to perform their assigned work. So as auditor, we need you to be able also to look at the information technology and understand the tools that you have as an auditor to be able to assess the risk related to IT. However, all internal auditors are expected to have the expertise. Not all the internal auditors are expected to have the expertise of internal auditor whose primary responsibility is information technology auditing. We are not asking you to perform IT audit. We are asking you to have the basic knowledge related to IT, so in that way you will be able to assess the risk and evaluate the controls. Now, the chief audit executive must decline the consulting engagement or obtain competent advice and assistance if internal auditors lack knowledge and skills and other competencies needed to perform all or part of the engagement. So look what they say. If the client said, can you help us as internal audit department in performing something, and you discover as a chief audit executive that you don't have the skills and knowledge inside your internal audit team to perform this assignment, you have two options. The first one, to decline the assignment. You say, sorry, we can't. Or in case it's important and you consider it as an important assignment, maybe you can obtain these individuals from outside to help the client in performing this. So look what they say. You must decline the engagement, or you need to obtain competent advice from outside. It depends. You can evaluate the issue and discuss with the audit committee. So, what about do professional care? They say internal auditors must apply the care and skill expected of a reasonable, burdened, and competent internal auditor. So we are not asking you to be and perform everything with no errors, no mistakes. We are expecting you are going to do the best you can. You need to understand the issue and be able to collect the right evidence, do the right testing to come up with the right conclusion without doing anything not according to the standards, without ignoring or being careless when you are doing your job. So they say do professional care does not imply infallibility. It doesn't mean you are not going to fail, you are not going to do mistakes. We understand, but you need to do the best you can to perform your job. They say internal auditors must exercise due professional care by considering what? They need to consider the extent of work needed to achieve the engagement objective. How much work we need to do. Is it going to take 1 week, 2 weeks? How many individuals we need? Relative complexity, materiality, and significance of a matter to which assurance procedures are applied. How much actually the complex is the process. Based on that, you can assess how much effort you need to do to be able to understand this process and audit it. Adequacy and effectiveness of governance, risk management, and control. First, you need to ask yourself a question. Are the internal controls strong? Can we rely on risk management? If this is the case, maybe we need to do less auditing on the transaction and more auditing on the procedures, on the controls. So this is where you need to assess how much can you rely on these controls, and can you audit the controls mainly rather than auditing the transactions. Adequacy and effectiveness of governance, we discussed that. Probability of significance, error, fraud, and non-compliance. Do you expect there are so many errors and non-compliance? Based on that, you can maybe need to do more testing. You need to select larger sample. So this is where you need to assess. And finally, cost of assurance related to the benefit. They always say that you need to consider that the price of the light should be what? Should be less than the cost of the darkness. So in that way, this is where we need to assess how much is the cost compared to the benefit that we are getting. If the benefit is actually more than the cost, is okay. But if the cost is more than the benefit, this is where you need to consider the cost of the audit is not actually worth it, right? Because it's costing us a lot. So they say, in exercising due professional care, internal auditors must consider the use of technology-based audit and other data analysis techniques when they are performing their job. So you need to be able to use the new tools and techniques to be able to automate your job, to be able to use something like different software like ACL, to be able to do testing rather than going and doing a manual test. They say internal auditors must be altered to significant risk that might affect objectivity, operations, and resources. However, assurance procedures alone, even when performed with due professional care, do not guarantee that all significant risk will be identified. We are not saying you are going to identify everything, but we are saying you are going to do the best you can to be able to identify the risk inside the operation. They say internal auditors must exercise due professional care during consulting engagement by considering what? Needs and expectation of the client. You need to understand what the client are they expecting from you when you are performing consulting engagement, including nature, timing, and communication of the engagement result. So these are the three things: nature, timing, and communication. Relative complexity and extent of work needed to achieve the organization objectives. How much work and effort you are going to do in this consulting engagement? How many staff we need? What is the time period? Cost of the consulting relative to the benefit. How much is going to cost you and how much the organization is going to benefit from this consulting engagement? Now, continuing professional development. If we are speaking about you as an internal auditor, you always need to improve your skills. You always need to gain more knowledge. Related to what? To two areas: internal auditing and the business function. Look what they say. Internal auditors must enhance their knowledge, skills, and other competencies through continuing professional development. Always you need to be able to earn more knowledge related to the business and internal audit operation. So this is the main attributes that we are expecting from you as an internal auditor to have. We want you to be able to be independent, objective, do your job with a professional quality, ensure that you are continuing your education, and you are doing your job with due professional care. Now, for us to ensure that you are providing what we call a quality audit, we need to have a program called Quality Assurance and Improvement Program. Quality Assurance and Improvement Program will provide assurance to the board of directors that the internal audit function is performing their job, first, according to the standards; second, effectively; third, they are actually always using the best practices and ensuring their work is up to the high standards possible. This is why we have Quality Assurance and Improvement Program. So they say the Chief Audit Executive must develop and maintain Quality Assurance and Improvement Program that cover all the aspects of the internal audit activity. So that's a question. Who is responsible for ensuring the quality of the internal audit work inside the organization? Not the audit committee, is the Chief Audit Executive. The audit committee will review that, but the Chief Audit Executive, he is responsible for establishing and maintaining the Quality Assurance and Improvement Program. They say Quality Assurance and Improvement Program is designed to enable an evaluation of the internal audit activities' conformance with the standards and an evaluation of whether internal auditor applying the code of ethics. The program also assesses the efficiency and effectiveness of the internal audit activity, and identifies opportunities for improvement. So it's not only about assessment, it's about helping the internal auditors being able to improve their practices and do the best they can. They say the chief audit executive should encourage the board oversight in the quality assurance and improvement program. Now, what are the requirements for the quality assurance and improvement program? They say the quality assurance and improvement program must include both internal and external assessment. So we have two things. We need to do internal assessment inside the organization, and we need to bring someone from outside to assess the internal audit function to ensure they are in conformance. So, internal assessment, what do we do? They say internal assessment. Internal assessment must include ongoing monitoring of the performance of the internal audit activity. So the first thing, we need to do an ongoing monitoring for every engagement, for every work we do, for every assignment, and periodic self-assessment or assessment by other persons within the organization with a sufficient knowledge of the internal audit practices. So we do it on an ongoing basis, and every, for example, engagement, every quarter, every year. So that way we do it on a periodic basis. They say ongoing monitoring is an integral part of the day-to-day supervision, review, and measurement of the internal audit activity. Ongoing monitoring is incorporated into the routine policies and practices used to manage the internal audit activity, and uses processes, tools, and information considered necessary to evaluate the conformance with the code of ethics and the standards. So what they want you to do, they want you to be able to supervise the internal audit staff to ensure their work is always according to the standards and they are following code of ethics. They say periodic assessment, on the other hand, are conducted to evaluate the conformance with the code of ethics and the standards from time to time. So that way, sometime organization, they say every, let's say 6 months, every 1 year, we select some of the audits and we go and review them again to ensure the audit is conducted according to the standards. They say sufficient knowledge of internal audit practices requires at least an understanding of all the elements of the international professional practice framework. So at least they need to ensure that they have the knowledge of the IPPF standards. This is for the internal assessment. Now this is interesting. In the internal assessment, they say internal assessment need to be done inside the organization. However, the ongoing monitoring and the internal assessment need to be communicated at least annually to the board of directors. So if you are doing ongoing assessment, every 1 year you communicate that to the board of directors. However, when we are speaking about periodic assessment and external assessment, the question, the exam, you need to communicate the results of the periodic internal assessment and external assessment every time you do them. You need to communicate to the board that we've done this assessment and this is the result. Now, they say external assessment. External assessment must be conducted at least once every 5 years. That's a question. By qualified. What's the meaning qualified? Qualified and independent assessors or assessment team from outside the organization. The chief audit executive must discuss with the board the following. What is the form and frequency of the external assessment? They say at least every 5 years. Some organizations, they do it every 3 years, every 2 years, every 1 year. So you need to discuss with the board of directors how often you need to do this. They say the qualifications and independence of the external assessor or assessment team, including any potential conflict of interest. So now the discussion. The organization that is going to provide the external assessment, they need to be independent from the organization. They need to be qualified. They need to understand 3 things. The first thing, they need to understand internal audit standards, the IPPF standards. Because how are they going to assess the internal auditor if they have no idea of the standards? Second thing, they need to understand the industry that you are in. If they are involved in banking, if they are involved in hospitals, hotels, retail, they need to understand the industry, because how are you going to assess if you don't understand the industry? The third thing, they need to understand how they can conduct what we call an external assessment. Do they understand the external assessment process? So this is where you get qualified. Someone will understand the internal audit, the industry, and the assessment process. Now look what they say. External assessments may be accomplished through a full external assessment or self-assessment with independent external validation. Some organizations, they only have the head of internal audit and one auditor. Do we need to bring someone from outside to assess that? No. What they can do this. They can do self-assessment and they bring someone outside independent to provide validation that their self-assessment is done in the right way. So two ways. Not all the time we need to do external assessment. We can do self-assessment with independent verification. They say external assessor must conclude as to the conformance with the code of ethics and the standards. The first thing, we need to ensure your organization is actually being audited by the internal auditors using the IPPF standards. This is the first thing. And there are other things that we look at when we are speaking about the external assessments. What are the other things? We need to ensure that internal auditors, not only in conformance with the standards, we need to ensure that they are meeting the expectations of the board of directors, of the audit committee. We need to ensure they are using the best practices and tools to be able to automate their internal audit work. We need to ensure that they have the knowledge, experience in performing the job that they are doing. And finally, we need to ensure that the audit they are doing is adding value to the organization. What's the meaning of adding value? That they are looking at the cost, the benefit, they are looking, is it gonna help the organization in accomplishing their objectives or not? So look what they say here. They say the external assessor must conclude as to the conformance with the Code of Ethics standard. External assessment may also include operational and strategic comments to how can we improve the internal audit function. They say qualified assessor or assessment team demonstrates competence in two areas. So they are saying we need to see that you have two areas that you understand. Is what? The professional practice of internal audit and external assessment process. So for you as an assessor, as a person as an organization that's gonna come and assess the internal auditors, you need to know the standards and you need to know the assessment process. Competence can be demonstrated through a mixture of experiences, theoretical learning, experience gained in organization with a similar size, complexity, the same sector of an industry. Technical knowledge is more valuable than a less relevant experience. In the case of an assessment team, not all the members of the team need to have all the competencies. Again, the team that's gonna come and assess you, not all of them. At least we need to have the team in general, they have the knowledge to be able to perform this job. They say it's the team as a whole that is to be qualified. The chief audit executive uses professional judgment when assessing whether the assessor or assessment team demonstrates sufficient competence to be qualified. So always is a discussion between the chief audit executive and the board. Do we believe that this assessor, who's going to do the external assessment, is actually qualified or not, based on their knowledge of internal audit, their industry experience, and their knowledge of the external assessment process? They say independent assessor or assessment team means not to having either or conflict of interest and not being part or under the control of the organization to which the internal auditor belongs. We can't have someone inside the organization providing the external assessment. This is why what we say, someone should be from outside the organization doing the external assessment. They say the chief audit executive should encourage the board oversight in the external assessment process to reduce perceived and potential conflict of interest. Board of directors should look at the work of the assessor and ensure they are doing their job in the right way. They need to do monitoring oversight. Now, what are the reporting requirements related to quality assurance and improvement program? They say the chief audit executive must communicate the results of the quality assurance and improvement program to senior management and the board. Disclosure should include the following. When you are communicating the assessment, what you need to include? The scope and the frequency of both internal and external assessment. How often are you doing internal and external assessment? What is the scope that's covering? The qualifications and independence of the assessor and the assessment team, including potential conflict of interest, conclusions of the assessors, and corrective action plans. What is the result of the assessment? And what are the corrective actions that internal auditors they need to take to be able to do it much better next time? So, in the interpretation, what they say the form, content, and the frequency of communicating the result of quality assurance and improvement program is established through discussion with the senior management and the board and considers the responsibility of the internal audit activity and the chief audit executive as contained in the internal audit charter. To demonstrate conformance with the code of ethics, the standards, the results of the external and periodic assessment are communicated upon completion. That's the question. When you conduct periodic assessment, when you conduct external assessment, the result of the assessment need to be communicated immediately to the board of directors. And the result of the ongoing monitoring are communicated at least annually. So the ongoing monitoring, the supervision that you are doing inside the internal audit department, at least you need to communicate it annually. They said the results include the assessor or the assessment team's evaluation with respect to the degree of conformance. Are you in conformance with the standards? Now, what will happen in case you are not in conformance with the standards? And what will happen in case you are in conformance with the standards? That's the question. So look what they say. They say use of conformance with the international standards for professional practice of internal auditing. So they say indicating that the internal audit activity conformed with international standards for professional practice is appropriate only if supported by the result of the quality assurance and improvement program. So you can only say that you conduct your job in conformance with the standard if the internal and external assessment that you conducted conform this fact. Only. They say the interpretation, internal audit activity conform with the code of ethics and the standards when it's achieved outcome described, the result of the quality assurance and improvement program. So they are saying the internal and external assessment include the result of both internal and external. As I said, all internal audit activity will have the result of the internal assessment. Internal audit activity in existence for at least 5 years will also have the result of the external assessment. So if we have the result of the internal and external assessment, you can say you are in conformance. What if you are not in conformance? That's the disaster, right? What they say, when non-conformance with the code of ethics or the standards impact the overall scope or operation of the internal audit activity, the chief audit executive must disclose the non-conformance and the impact to the senior management and the board. So you are, as a chief audit executive, responsible to disclose to the board the non-conformance. You need to disclose the scope. Now, when we are speaking about non-conformance, you can't say, well, we are in conformance in all the areas except this area. If you are not conforming, you are not conforming. You can't eliminate certain area and say we are in conformance here, we are not in conformance here. Also, you need to say the impact. Maybe if you are not in conformance because you are not objective in certain audit, the audit need to be done again because the person he was auditing his cousin or his friend. So in that way, this is not appropriate, so we need to conduct the audit again. You need to say what is the impact on that assignment. With that, we conclude the sections related to the attribute standards. So we discussed here all the issues related to the attributes that internal auditors, they had to follow, they had to have when they are actually planning and reporting internal audit, and what kind of quality assurance we need to have over the internal audit function to be able to perform their job with high quality.